Hello, everyone. Welcome to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to talk a little bit about a lot of things. We're going to go ahead and recap the big events that came out over about the past, 18 hours or so. We've got an opportunity showing up in the Euro-USD. We've also got a potential buying opportunity using that 920 EMA on gold, and it also sort of lines up with one of our key retracement zones that we were talking about yesterday. Listen, I want to be long the gold market, especially going into the election uncertainty. We've got some stories circling right now that are starting to cast doubt on whether or not you're going to have an orderly election and or a peaceful transfer of power here in the United States. Those are going to be huge market drivers. Essentially, they're going to be bearish for U.S. equities and anything risk, and they're going to be bullish for safe haven. So we're going to talk about that. We've also got some good stuff on that 920. We're going to do a 920 crossover with RSI confirmation. We've got a potential setup coming our way on the gold. We've also got a potential setup coming our way in Bitcoin. And then also we've got to look at the U.S. 100. There's a massive support zone that's really getting dialed up and ready to rock for the U.S. 100 of the NASDAQ. So I want to welcome everybody back to the room. Bobby Bob, always a pleasure to see you. Let's go ahead and get this thing started. Okay, if you need a place to trade, be sure to swing by Switch Markets 100% deposit bonus. Get you up and running in no time flat. Boost that purchasing power. Work on your capital efficiency. Should be in good shape. Right here, this is a short that we put out not too long ago. It's called Learn the 920 EMA Intraday Trading. It's been very well received. So if you're here because of this short, we're going to go ahead and run through a 920 trade, and I'm going to sort of show you how I like to view the market when I'm using, strategies like this. Now, I know in isolation, a lot of people just want the secret. They want the holy grail. They want the secret. Shane, do I trade a 9 EMA? Shane, do I trade a 920? What do I do? How do I do it? Well, there's a lot to being a winning trader, and a lot of it has to do with identifying market state and understanding what's happening to price action. And understanding the price action is just a product and a function of price discovery, which is what? The dialogue between buyers and sellers. That's all there is to it. Mark Orb, good to see you. Missed the stream yesterday. Had to take the wife out to lunch. You know how it goes. A happy wife, happy life. Absolutely. I think you made the right choice, Mark. I think it's absolutely imperative that, if your better half wants to go out to lunch, go out to lunch. There's nothing wrong with that. The markets will be here. These streams 24/7, 365. Go ahead and check them out anytime you like. All right. This is the 920. This is the 920 on a 30-minute gold chart. Now, I get probably the number one question I get asked about these strategies that we've been putting out on YouTube is, what time zone do I do it in? What time frame? What chart duration? What periodicity? And I go, well, there's a lot of different ways you can do business. I like a 4-hour chart, but this 30-minute chart's interesting to me because I want an excuse to buy gold. I want to be able to buy gold. I'm telling you right now, we're probably not going to get burned being on the long side of the gold market. Now, why would we say that? Well, the pressure's definitely up. All the trends on all the time frames are up. There's absolutely no reason to not look at buying gold. Dibble, sorry, Shane, late on parade. No, you guys are just fine. Remember, the only person that can't be late's me, and I do take being punctual very, very seriously, but sometimes we run into tech stuff and we run a little bit late. It's no worries. Remember, we're always available 24/7, 365 on the past streams. Just tune in and watch anytime you'd like. As far as this goes, a 30-minute chart gold spot. Here's your crossover up here. We sort of had a situation where you were in overbought territory, and the idea was maybe to sell right here on a crossover. It just didn't go very well. Why do you think that didn't go very well? It's just sort of chop city, guys. No strategy's 100% winner, but this right here, it's sort of fascinating because you've got a nice big bearish move. We are deep into oversold territory here. RSI confirmation. Remember, anything under 30 is oversold. Anything over 70 is overbought. So what we want to get accomplished here is trying to find a way to get long this market. It's easy. 920s are easy. I understand the appeal of these strategies. They're very easy. The bottom line is this. When the red one, the 9, crosses the 20, you're going to go long. It's that simple. I was really optimistic that we were going to get that chance right now during this live stream. I was been looking at this trade for probably about 2 hours or so. Hasn't come across the board for us yet, and you'll also notice that we've got a pretty good spread. So this trend is significant. I would look for this crossover to develop probably going into the Asian session, something like that. But if we do in fact get it, you're going to look to take that long. And the idea is you've got your oversold territory. You want to go ahead and get that crossover. Remember when the 9 crosses the 20, and we outline all these rules right here on the 60-second short. But when the 9 crosses the 20, that's when we're looking to buy. Now we're adding in the RSI as confirmation. So it's absolutely huge. Now, as far as what do I think about gold? Well, I would take a different approach with my own money, and I recommend you all do that as well. You don't just sign up somewhere and say, hey, they're saying a 920 is the way. Well, maybe it is, maybe it isn't. Depends on who you are and how much money you got and what your mindset is. For me, I love horizontal support and resistance levels. I like being conservative with my profit targets, and I know when I hold out and I'm patient and I get my number, I'm going to win. That's all there is to it. Now, there's a couple of reasons for that. Number one, if I wait a while to get my level and it comes into play, I'm going to be more patient with the trade. I'm going to give this thing an opportunity to work. So when I take a good look at the gold market, there's absolutely no question that this is an uptrend. This is a weekly uptrend. We can look at dailies if you want, but let's look at this weekly for a minute. If you're looking for an example of a trending market, that is it. The pressure's been up for a long time, but realistically coming in to this year, compression coming out of December, January was sort of compressed, and then February we broke. And we were sort of off to the races. What happened back in February? I was here. A lot of you were here. What were we thinking in February? Rate cuts, dovish policy, rate cuts, dovish policy. We also thought there was a great chance that you were going to see war escalations either in Russia, Ukraine, or Israel, Hamas. What did that do? That kicked off what I would call definitely an uptrend. I won't say it's for the ages, but it's definitely all year long. So when we get into April and you see this compression and some pullbacks and people are starting to sell gold, why were they doing it? Key levels were definitely a big part of it. That high right there was at 2450. So you can see really those sellers held the market in check in front of 25. But what was the next port of call really? Well, we got a little bit of compression right here for about a month, right around 25. But as soon as we broke above 25, we had a pretty good idea that we were going to 2750. And right now, that's sort of what we're seeing. 2750 is setting up as an area of two-way action, but definitely is what I view as being really a crucial support zone. So if I'm interested in maybe buying this market, this is what I want to do. Weekly level, spike low, spike high. Now, why would I be looking at a weekly time frame? My news cycle, tomorrow's NFP, U.S. non-farm payrolls. Connor's going to have that for you live. Be sure to check it out. But that's a huge market mover. And when we're talking about a big market mover, typically you're going to get price action. And I have a pretty good understanding that if I do get price action down to, say, 27.20, that's going to be a fantastic trade, what I would call a banger. So I'm going to be looking to bid there. And if that doesn't work, we get stopped out up there. Definitely 26.75 would probably be the bet of the fourth quarter. That would be the bet of Q4. And if you get something like that before the election, I would be absolutely shocked. Let's go right down to our daily. And you see there's your big daily sell-off. So if you take a look at this daily, it's no wonder on the 30-minute chart for our 920 that we're getting a buy signal. That shouldn't really surprise anybody. That's the biggest sell-off we've seen in quite some time. For me, I would be looking at that 13-period EMA right around 27.25, somewhere in there. And then my key levels down there right around 27.20. So that zone between 27.25 and 27.20, that's going to be a big-time support zone. I would absolutely love it if we got an opportunity to bid somewhere down in here. So, you can't really project on the market and try to build trades in your mind well before they happen. But, boy, if we see this trend sort of continue down into here and we remain in oversold territory, and then all of a sudden we get a chance to maybe buy around what I would call really robust downside support in gold, that's going to be a pretty darn good trade. And if we get that chance, we may actually be able to catch the bottom of it. Definitely something to think about there. Once again, you're going to trade the way that you want to trade. You're going to trade according to your money, your experience. You're going to trade according to what makes sense to you. A lot of people look at these moving average crossovers and they don't trade them, and because it doesn't make sense. And I don't have a problem with that. I mean, for me, if I was going to trade crossovers, I would trade my crossovers. 13-period EMA crossing over my Bollinger midpoint. Look at that. I would say it's a pretty good trend indicator. Our last crossover was back there in July. Yeah, that made a ton of money. Do I trade those, though? Well, not really. Not really. I look at the moving averages is really being supporting evidence, and that's one way that we could trade those crossovers relatively well is we use something like a Fibonacci, buy or sell pullbacks based on the crossovers. That's a fantastic way to approach the market. T. Marina, good to see you. T. Marina, hi, Shane. How do you decide your watch list? Good question. Good question, T. For me, well, it's just old hat. I know exactly what I'm trading and what I want on my board. The first thing I always have up is stocks. I always look to see where the money's going in and out of risk assets. So right there, the Dow, the S&P 500, and the NASDAQ, and then we go right there to those CFDs and then my futures contracts. I want to know exactly what's happening in the stock markets at all times. at all times. Now, not necessarily because I'm going to trade them, but I definitely want to know where price is going. From there, I always want the VIX up, the volatility index. I want to make sure that I know what the market's thinking, where that fear gauge is, and then the DXY, the dollar index. Now, as far as the Forex goes, and then it's my futures contracts that I'm trading exclusively, gold futures, crude oil futures, and then my equities index futures. Those are always going to be on my board. For the Forex, I stick to the majors. I stick to the majors on my watch list. Now, you can build them any way you want. You can put your crosses up, your minors, your exotics. There's nothing wrong with that for me. I just look across the majors, and let's say I see a little bit of action in the Kiwi that's a little bit different from, say, the dollar yen or something like that, then maybe I'll start looking at different pairs local to the Kiwi. So I use my majors as a barometer of where to look. So if I see big action out of the Great Britain pound, I'd say, okay, maybe look at the pound pairs. But it's relatively straightforward. Like right here, Kiwi's flat today. Am I going to look there for a trade? Probably not. Australian dollar, US dollar, probably not. Probably won't be looking at the Aussie. So for me, it's about the majors. And then, of course, I've got crypto up as well because, well, you got to look at crypto. That's part of doing business, that's for sure. And we got one other 920 setup that I want to go over. And right here, interesting stuff, guys. Bitcoin and gold sort of mirroring each other on the 30-minute chart. You'll notice we're deep into oversold territory. If I could ever get that right there. Deep in oversold territory beneath that 30. So right now we're looking for a crossover to get long Bitcoin as well. And I think we're going to have pretty good success. Once those things cross, that's probably going to be the end of the dollar strength. And right now we're starting to see the dollar taper off. So there's a lot going on here, but I think we're going to have trades in Bitcoin and gold, and it won't be in the not too distant future. So definitely something to think about there. Absolutely, Team Marina, you're 100% welcome. If you have any other questions, everybody, just let me know. I'm more than happy to answer. So in any case, that's sort of what we're talking about, that 920. We're going to do some scalping here in a minute with that strategy, but I do want to start off with a trade idea that we just put out. Now, this is a trade follow-up. This is one that I really like. Now, yesterday we put out an Australian dollar, US dollar trade. As of yet, that one has not come to fruition. We didn't quite get our levels earlier today, but I love the fact that you're going to have NFP coming our way tomorrow. Now, NFP is a huge market driver, and it's going to send the majors directional. So for me, I'm looking for levels that are a little bit off the pace. I want to see exactly where my levels are, my macro levels are, and give me an ability to be on the proactive, what we call out on the front foot, and ready for anything that comes our way. So this was a trade idea that we put out just a little while ago, and it really shows you a convergence of three indicators here on my charts. Be sure to read that if you're in the trading room. If you're new, just click on our picture, follow us, follow me, follow Connor, and you'll get these delivered straight to your email box. Now, this is sort of an interesting trade. A lot of people aren't really interested too much in trading the Euro USD on weekly time frames. For me, it can be very, very good. It's something that I favor. Why? Because the ranges are big. 112.13 is your high, your spike high here. 107.60 is your low. So you got about, 500 pips, give or take, 460, 453. Okay, well, that's a pretty darn good range. Now, if I'm only looking to step up and make maybe 39 or 40 pips out of it, that means I've got an incredible advantage. That means the market doesn't necessarily have to even hold its structure. I may be able just to get in and take that scalp and move on and not even worry about it. So if, in fact, we're looking to execute this trade, I've got 109.33. That's going to be my 38% retracement. I love where it's trading right now, 108.62, about 70 pips up. I think that if we get a good opportunity, maybe on an NFP number, and we go right up there, I've got a Bollinger midpoint at 109.28, and I've also got a 13-week moving average up there at 109.46. I love converging indicators. I love it. Now, we've been using RSI and crossovers and 9 EMAs as sort of a way to build trade ideas. Well, that essentially is confirmation. When the RSI tells us to get in, we use the crossovers of the 9 EMA as a signal, and then we execute our trades. That's fine. That's fine and dandy. For me, I do it a little bit differently. I'm looking at Fibonacci retracements to identify market state, and then I'm looking for my Bollinger midpoint and my EMA, and I want to see both of those things sort of line up for me. And when they line up in a general, or excuse me, a specific technical area, then it's bombs away. So right here, I'm guns up. Check out the trade idea. It was about I believe it was 109.25 sells. That's a pretty darn good level. I would be very surprised if price did, in fact, break above this zone without a heck of a fight right there at 109.33. So I'm watching that closely on the Euro USD. I think that's absolutely imperative that we look at something like that. Let me see. Mark, let's see. T Marina, how do you get your volume and RSI indicators to overlay? The volume, you just sort of, the volume is added just to your chart window. If you go up to indicators and add it on TradingView, you can just collect that, just put that on your previous chart as an overlay. And then your RSI, or in this case, I use an ADR down here, an average daily range. But if you do, in fact, want to add a separate window, you just click add it in your own separate window pane. So remember, I use volumes as a chart overlay, and then I use RSI down here as its own window. And you can see right here, let's see if we can get right there. You'll notice I don't even have volume on this chart, and it's because it's a gold spot. But if we were to switch over to say like a YM or something, you'll notice that that's listed as a chart overlay, even though RSI is in its own window. So basically, I just click on them and add them. It's really nothing too fancy, but I do like to see exactly what we've got going with our volume at all times, especially when I'm trading futures contracts. So this is interesting. I didn't even intend to do this, but our YM, we've got sort of a comeback. We've got a buyback during the U.S. session, or at least the mid-half of the U.S. session, and we've got something coming our way, it looks like, where we've got that 9 EMA that's going to cross that 20. We were in oversold territory. You can see that our volumes have picked up dramatically since we're in the U.S. session. I would be looking to buy this thing. Excuse me. I would be looking to get active on a buyback here. I'm on this E-mini Dow futures. So that's a few looks at that trading strategy. One other market that I do want to cover here before we go any further. E-mini NASDAQ. Well, this isn't the E-mini NASDAQ. This is the US 100 CFD. But right here, this NASDAQ, spike low there, spike high, 3-week range. What do you guys notice about the patterns, about the weekly ranges? Long-legged doji. That's a near doji. It's got a little bit fatter body, but it's not necessarily a directional move by any stretch. What do you got this week? You got another doji setting up. If, in fact, we could get this bearish price action, maybe down to our level right there, 19,357, 19,3, maybe 19,35, or 19,5 even, that could be a great trade, somewhere down in there. I'm watching that area very, very closely going into tomorrow's NFP levels, NFP numbers. I think there's going to be an awful lot of trading to be had, and I think we're going to be able to do the work. So I'm watching that support zone relatively closely on the NASDAQ 100. I think that's going to be a banger trade. I'm still buying pullbacks, although I do believe that, the winds of change are blowing, and it all has to do with politics. But let's start off with a few fundamentals from today. I always like to cover some fundamentals on these streams, and the reason why is I think that if you guys are going to be complete traders and be traders, it's much more than pulling up a 9 EMA and throwing it on your chart and saying, okay, price is above it, I'm bullish, price is below it, I'm bearish. You need to know a little bit about what's driving the markets. That's absolutely imperative that we understand that. And if we don't know what's driving the markets, we're doomed to make mistakes. Now, listen, even if you're not an economist, even if you're not, or have a background in really anything that's due to finance. I mean, I always say the only thing you need to do to be a trader is to be able to keep a checkbook. If you can balance your checkbook, you could probably be a trader. And to be real honest with you, you don't even have to balance your checkbook. Everything's automated these days. But what you need to do, if you're not going to learn anything else about the fundamental side of the market, and I mean nothing. If you say, Shane, I hate fundamentals, I like technicals. Okay, great. Me too. You need to know when the big events are and what moves the markets. If you know that ahead of time, you're going to beat 80% of the competition that's just sitting there waiting for the 20 EMA to get crossed over by the 9 EMA. That's what makes you a better trader. Now, as far as what can I say about trading fundamentals exclusively, you need a lot of money to do that. Now, I'm not going to lie to you. That's the best way to trade. If you have the deep pockets and the capital outlay, you can make a lot of money just trading fundamentals. Unfortunately, it's very expensive. Your stop losses don't really exist. You're just trying to get on the right side of the market. So a couple of things that we want to go over today. I want to recap really the key events, the big events that we looked at during the U.S. overnight, and then we want to preview U.S. NFP, and I'm going to get through it relatively quickly because today's events, I don't think that they have much bearing, but they are worth looking at. Right now, Thursday, BoJ interest rate decision, that was big, and the PCE price index. Our fundamental of the day is going to be the PCE price index. We've already sort of covered the action in the euro. You can see right there, euro CPI came in a little bit hotter than expected. I'm looking for this type of thing to be a trend. I expect it fully to be a trend. across really around the world, we're seeing rate cuts be the rule. Well, if you don't have inflation under control and you're cutting rates, what happens? Well, your markets probably go up, but so do prices. And eventually, you're going to have to address the price action. So for me, I take a good look at this and I say, wow, inflation came in hot. That's not good. Maybe don't cut rates. I don't know, though. ECB is going to do what they want. They're not going to listen to me, and that's fine. They're not going to listen to you either. But as long as we understand exactly how to react to these things, we're in pretty good shape. So what do you have? You have the USD. We're going to cover that in a minute. Sort of expecting to be a little more hawkish than we first thought. And now, is the euro actually is the ECB willing to back off the rate cut stance? I don't know. They were pretty happy that inflation was down around 2%. Was it premature? Could be. And we're going to find out in the next quarter. But I think it's going to be fascinating. BoJ interest rate decision, that was pretty much the biggie during the overnight. The BoJ did absolutely nothing to interest rates, and that's surprising. That really is surprising because the BoJ wants to cut interest rates. They want to get dovish as fast as possible, get back down to a negative deposit rate to boost that export sector. Think about it. Japan as an economy is highly reliant on the export sector. It's highly reliant on selling goods abroad. And the reason why is because that type of prowess attracts foreign investiture, and through that one mechanism, you can grow your domestic economy. If your goods are hyper competitive on a global stage or in international markets, okay, that means that your companies theoretically are going to be profitable and they're going to draw more foreign investiture into the country. Now, Japan's an island nation. What does that mean? Well, it means that you've got limited resources. You've also got limited industrial opportunities. But industry in Japan's been strong for a long, long time. One reason why is that yen's been devalued. Okay, you devalue your domestic currency to keep those prices low abroad. We call that a dirty float. Don't mean anything derogatory by it. It's just the BoJ has been playing a dirty float for 20 years. That's the way it is. So when we take a look at the U.S. dollar Japanese yen monthly chart, we had this outlined as being a very, very big time zone. 153.49. We outlined this trade yesterday. And if you do look at this daily chart, if you remember the analysis, I said, listen, if you wanted to go short, I would allow it. It's like, hey, listen, if you want to do it, I'll allow it. Just make sure that you have you just make darn sure that you've got your stop loss above this double doji. Well, since we talked last, it wasn't a double doji. It became a triple doji. And so what do you really have there? Boom, boom, boom. A triple doji is a reversal formation. A double doji is a reversal formation. With our key level, that trade turned out to be very good. So if you made money being short here, that's a great job. Personally, I thought it was incredibly high risk and not necessarily something that I wanted to get involved with just because that BoJ can just send the yen directional in a hurry. And that's exactly what happened here, off about 0.75%. Why? Because the BoJ held the rates where they were at. Now, it's absolutely huge. That's a huge market mover. Now, as far as what I would be looking to do, if in fact we do get a bigger retracement here off the Bank of Japan announcements, something like that could be absolutely fantastic. 149 and a quarter, I would love it. Now you're saying, Shane, that's 300 pips away. And I go, yeah, it is, but not necessarily for next week. Look at all these numbers sort of converging right around 149 and a quarter. If we do, let's say we get a big NFP number tomorrow or something that really sends the USD to the showers, makes it very dovish. We get a pullback here, then we're stepping up, then we're buying, and we're feeling really good about where we're at. I would have that trade on the board definitely for early next week throughout next week's trade. Remember, tomorrow's the first day of November. That's a big deal. That's a big deal. Institutional traders will look to balance their books. So right there, sort of going back to the watch list question that was brought to me by T. Marina, very good question. And I said, okay, this is how I've designed my watch list. And to be honest with you, it's been this way for a long time. And the reason why is I believe in comfort. If you're going to trade, be comfortable. I know exactly where everything is. I don't even really have to look at the symbols anymore. I just know what exactly is going on by looking at my list. Well, dollar yen's moving. Why did it move, BoJ? Okay. Would the yen be a good target to trade? Potentially. So let's go ahead and see if we can find a trade on this thing. Let's go down to our 920. Let's go to our 920 setup here. Dollar yen. What do we got on the 30-minute chart? Okay, we don't have much. Right there, we're in the dead center. We were in oversold territory. So theoretically, that would have been the buy signal. Did we get it? Remember, it's a game of inches here. No, we didn't get it. That's the whole idea behind having a system or a confirmation or any of this stuff. When you don't cross, what did that do? That kept you out of a bad trade. Now, that's on a 30-minute chart. Let's back off to a 4-hour chart and see what we have here. Okay, back here on Sunday on the weekly open, we had a sell signal. Right there, we were in overbought territory. We were looking to sell the market on the next crossover. There's your next crossover. Now, ideally, you would love to have that crossover a little bit closer to your oversold territory, but you sort of get my picture. The idea is that the top would basically be in, and we would look to be getting in right there. So if, in fact, you sold right there, you had a decent opportunity to trade this thing. You're already short, and you're waiting to see exactly how this thing unfolds. Now, that's a tough trade to take, no question about it. So let's take a step back and let's say, okay, how do I want to get involved here in this market? Well, I know the yen's moving, so let's go over here. Great Britain pound, Japanese yen. Looks like we were onto something there. There's your triangle. There's your bullish flag. I mean, this stuff's, a week old, 2 weeks old, something like that. But you got your nice big bullish break. Where'd you get it to? Right up to 200. I would definitely circle that. But now we're on the retracement. So the question becomes, what do I want to do? Do I want to be long or short here? The guppy, pound yen. For me, I'm looking to buy pullbacks. I don't believe in the yen long term. That's just my own opinion. I think sooner rather than later, the BoJ will get involved, and they will try to devalue the yen to keep that domestic economy and the foreign investiture coming in. Now, the reason why I would say that is about 10 years of experience. Well, what do we have? Is there any way that we can trade this thing? 38% at 195.92. Nice big spike low, spike high pullback. Where are we at right now? Are we in that neighborhood? Yes, we are. There was your 4-hour sell-off. We're right at that key level. So if I was making a trading decision right now, what would it be? It would be a buy market order, and I would go ahead and just go long at market. What's the trade idea here? The trade idea is that my macro support zone, my weekly 38% is going to hold its water. That's right around that 196 area. Now, the heat's definitely on. If I was managing this trade, I would be careful with it, but we're trading at my zone. We went down, checked out the low, and then we rebounded. Okay, do we want to be long or short right now? Until proven otherwise, on my macro level, I want to be long. Okay, Shane, what does proven otherwise mean? Well, got a couple of ways to trade this thing. Number one, you could scalp it, stop yourself out beneath this low. This low down here is right around 195.37, somewhere in that zone. So you could stop yourself out under there. I think that's probably what I would recommend. So, but about a 60 pip risk, something like that. Just make sure that if you go this route and you place your stop loss beneath this candle, remember this is your BoJ. I mean, this is your news candle. This is a big deal. It's not out of the realm of possibility to believe that we're going to rebound up in here somewhere. Not at all. The real question is where would I put my stop loss? It's got to be beneath that spike low somewhere. So if my low right there is 195.37, I don't know that I would go 09, but I probably would be right. I'd put it beneath that quarter handle. So that would be your risk. We'll see if we get any love here and get a little bit of a retracement back up here. We're looking for 60 pips, something like that on a 1-to-1. If, in fact, that was going to be the case, we would be right up in here, somewhere in that zone. If we wanted a 1-to-2 and we wanted to really bet that we gave back all those gains, something like that, you'd be shooting for market structure to trade back up to that order block. I don't know. I think that could be a bit shady. But right now, the market's coming off, and we're taking heat. And remember, if you're going to be a trader, you're going to take heat, and it's okay to take heat as long as you realize where you've got to get out. As soon as we take this out, I'm gone. And it might be right now, but if, in fact, we come off and we knock ourselves out, we're gone. We're looking to go long down here in the golden zone, which would be somewhere right around 193.52. So that's an example of how to build a trade on the fly. Sort of hope that helps. So it really shows my line of thinking and what we're trying to get accomplished. Active currencies, I want to trade things that are active. Why would this one be active? BoJ got involved. Are we trending? We got a big 4-hour bar. I wouldn't really say that we're trending. We had a breakout. I'm looking more along the lines of a retracement, a potential accumulation trade back up into this zone. But hey, listen, right now the proof's in the pudding, and we're definitely underwater in this trade. Something to think about there. Let me see. T Marina, isn't that artificial to keep rates low? Absolutely. Absolutely. The BoJ always loves to keep rates low, and by doing that, they typically set a negative deposit rate with the idea being they want all the yen they could possibly get into the economy. That stimulates economic growth, also makes those exports hyper-competitive abroad, and you see the indirect effect or the direct effect is an increase of foreign investiture, FDI, foreign direct investment. Three-pronged approach. That goes back to the heart of Abenomics, the late, great Shinzo Abe, who was assassinated a few years ago. That was his plan to keep everything sort of growing in Japan in a decent economic position. A lot of proponents, a lot of opponents. Just sort of the way that all ideas are in this world. All right, guys. A couple other fundamentals that we need to cover. PCE price index. Now, remember, this is the go-to. We got a weird news cycle this week because we had we had GDP yesterday, we had PCE today, and we have NFP tomorrow. That's really a compressed news cycle. Typically, we see GDP and core PCE spread out, sort of removed at least about a week from NFP. That didn't happen this time. So I'm watching these numbers relatively closely. And so is the United States Federal Reserve. This one came in at 2.7% year over year. But really the big thing that I'm looking at is the core PCE price index 0.3 came in as expected at 0.3, but that's above the previous release. And our PCE numbers, remember, we're not talking core here. PCE, the ones that include fuel, sort of relatively low fuel prices right now. Your PCE prices go, what do we got for monthly? 0.2% came in as expected, but they're still above the previous release. So what I always like to say is that, if you're above the previous release, you've got to have a decent understanding of where we're at relative to not necessarily our expectations, but history. Where are we at? Where is the PCE index? I've read all the headlines today. They all say, hey, listen, inflation's coming back down towards the Fed's 2% target. This is a pretty good reading. And then I look at the numbers and I go, on what planet is this a good reading? PCE price index in the United States increased to 123.93 points from 123.71 points. Okay, so we're still going up. Okay, an all-time high of 123.93 points. You're still at all-time highs. The disinflationary cycle hasn't begun. Now, there's definitely, what we're doing right now is we're saying, well, it wasn't as bad as it was earlier this year. No. But we're not necessarily plateauing or coming down like we did in the spring when everybody was crying for rate cuts. We started picking up the pace again in June, July, August, September. That's a 45-degree angle, and now we're cutting interest rates. That is the big thing to remember. Back here, we weren't cutting interest rates. Right here, we weren't cutting interest rates. We're still going up at a 45, and the Fed is now cutting interest rates. That isn't necessarily a recipe for success. I would absolutely love to talk over what exactly their mentality is with a member of the FOMC. If you guys are seeing this live stream, reach out to me directly. You can contact me in the trading room, the How to Trade trading room. I would absolutely love to hear what you guys are thinking. Cutting rates while we're still in big trouble with inflation. It doesn't make any sense. And, what I would definitely be saying to any of those folks that are making policy is, the markets aren't buying it. The markets aren't buying a dovish dollar. They're just not. Take a look at this weekly. When were our rate cuts? Right back in here. The U.S. dollar has absolutely exploded north. In my view, the market's pricing emergency rate hikes, not cuts. Not cuts. So in my view, I think that we have the jury is still out on inflation. And to look at those numbers is really disheartening because we've went through so many rate hikes. But to see T-bill yields go up, to see mortgage rate yields go up, to see the U.S. dollar in the trajectory that it's on, we're getting established above 104, and we're headed north. So, my Fibonacci's are set up for a monthly type of a motif, but take a look. 106, 105? Holy cats. That's not where we expected the U.S. dollar to be, especially after all these rate cuts. All right, one last thing to cover here, and then we'll see if we can maybe find one last trade here. U.S. employment up or down tomorrow, NFP Live. Connor will have it for you. You'll be able to unpack it. He's going to give you his opinions on exactly how to trade this thing and potentially get into a few, I would say. I don't know if high risk is the word. I think that, just as long as you have a stop loss and aren't risking the farm, it's not going to be high risk. But I would say high volatility trades that maybe are not necessarily risky, but they're going to be much more exciting. In any case, right here you go. Average hourly earnings. I'm not interested in that. Nobody is. We don't care about earnings right now. That's the politicians. Let them deal with that. What we're looking at is two things. Number one, NFP, the number itself. We're looking for 108,000 to fall dramatically from 254, and we're also looking at that unemployment rate. Will it hold firm at 4.1 or not? For me, the proof will be in the pudding. If in fact we don't see any downward revisions to that 254. Remember, you have an election next week. I would be shocked if if you see any downward revisions until after the election, but it definitely is probably going to happen. As U.S. unemployment up or down, you'll notice our non-farm payrolls, that spike came out of absolute nowhere. Absolute nowhere. If in fact we go higher than that, that's going to be an incredible market mover. I don't see how we do, but I didn't know how we would do it last time. And then you've got the U.S. employment right here, 4.3%. We topped out. Now we're back down to 4.1. I wouldn't be surprised at all if you do get a hot reading tomorrow and you get a bit of an unemployment, sort of a sell-off in unemployment, I guess you could say, something like that. For me, though, it's going to be really challenging for me to believe any of these numbers. Really challenging. Really, really challenging. As far as the election goes, you see right here, I'm sort of watching our dollar-yen, that dollar-yen position sort of come off. You'll notice the Great Britain pound-yen position is coming off big now, right around 195.75. So the yen is showing a little bit of pressure, putting some pressure on these majors. We'll see if it lasts. As far as what I would be saying about U.S. stocks, this is a good look at a 5-minute chart. I'm on this 920. The big thing we got to be aware of when it comes to risk assets, and then we'll sort of leave you with this, is the election is the number one market driver right now. No question about it. Number one. All these numbers pale in comparison. Right now, the markets are pricing Trump in with a W. I don't know. I'm already starting to see these fade a little bit. 63 to 37. I think that's going to be more like a 60-40 or maybe a 55-45 by election day. That would be my guess. But right now, you're seeing the market sort of price things in for a Trump victory. Now, it's very difficult to really say for sure who's going to win this thing. I don't necessarily know that anybody knows. But this is one thing that I think I do know, and we do know. The closer that we get to Election Day and the more we start to see inconsistencies and voting irregularities, this stuff's already coming to pass before the election. This stuff didn't happen until after the election, and it's starting to be one of those things that is we're splitting along party lines. We're starting to call people conspiracy theorists and things. But make no mistake, there has been a tremendous number of fake ballots found. There's been a tremendous number of election irregularities already found. This will lead to challenges, not just from the Trump side. This will lead to challenges from the Democrat side as well. The idea that we're going to know election night who won this election, I don't think that that's accurate. I just don't think that that's accurate. So right here, you can see that we've got an interesting crude oil market that really is fully predicated upon the election. Remember our trend line, interesting trend line. Our daily trend line didn't really sort of had a gap down beneath our trend line. Well, look what we have. We got another trend line. Take a look at our weekly. Look at our weekly levels now. What do you got here? Something like that. We could maybe even flatten that out. A lot of folks just connect to. You could say maybe that's a support level down there. Here's the level you won't see anywhere else on CNBC or MSNBC or any of them, Bloomberg News, whatever. This is the crude oil chart that I believe everybody's looking at. The institutions are looking at, and everybody's looking at because we have a huge level, and it's almost in play. Now, remember, the true price of crude oil back during the COVID panic was what? Depending on your broker, it was right in the neighborhood of about negative $40. Negative $40 a barrel. The reason why was we had a tremendous supply glut, meaning nobody was burning oil, so there was no place to put the oil. In any case, it's somewhere right around there. This is always tough to do this because nobody thinks price can ever go negative. We'll take a look at it. Somewhere right in there. That was your crude oil panic low during COVID. And there was your spike high somewhere in that area, 130, 129. That was the beginning of the Russia-Ukraine. Huge spike in energies. Negative 40 was the bottom, the COVID bottom. That range right there is very important because you had two seriously huge events. COVID, unprecedented, and then you had the Russian invasion of Ukraine. Also, not necessarily unprecedented, but definitely a huge global event that's been shaping economics really for the last 2 years. Well, look what we have in play now. 65.25. That's huge. 38%. The long-term bull market is still in play, and there's going to be a tremendous number of bettors there from 65.25. Now, a quick look at what can happen. If Trump wins, we go way down. You're going to be down there at 45 or 50, and I think it happens relatively quickly. If you don't win, if Trump doesn't win, Harris wins, you see this accumulation just sort of creep up between now and next spring. I'm a firm believer in that. And lastly, if you get election uncertainty or potentially civil unrest here in the United States, we see a tremendous spike. So right now, I think you have a tremendous number of institutional longs, long from 65 and a quarter, but right now it depends on everything. Everything's on the election, guys, and that's why this story right here is one that I'm watching closely. I expect formal challenges to be issued anytime. I don't know that this thing gets really decided at the ballot box. More than likely, it's going to be in front of the Supreme Court by the time it's all said and done. Now, maybe I'm wrong, and I really do hope I'm wrong. We need a nice, smooth election and a peaceful transfer of power, but just be ready as traders, and we're going to stress this more and more and more because it is what is important right now. If, in fact, the election does not go smooth and we see civil unrest, acts of violence, and contested elections, our assets go crazy. Risk assets down, gold up. Something like crude oil, I could see it breaking very, very high as well. All right, everybody, I want to thank you for joining me today. Sort of a long stream. I appreciate everybody that hung in there. For those of you that didn't, no worries. I had your attention for long enough today. Remember, NFP Live tomorrow. Let's see, Connor's going to be all over it. Be sure to get in, check it out. Check out our trade ideas. We've got a lot of them out there that are coming into play. I think they're going to be pretty good. And then also keep an eye on those markets because they're going to be all over the board. Remember, election is big. NFP's big. Hugely political event. I don't know what we're going to get tomorrow, but I know we're going to get volatility. We'll be back tomorrow to trade shortly after the U.S. Open. I'm going to go ahead and get some of these short-term strategies going and also some Fibonacci scalping of my own that we're going to jump in there and see if we can execute a few trades. All right, everybody, thanks for joining me. I appreciate that, Bryn. This is good. Hey, listen, if you can't get into days like today and news cycles like we have, then you probably should find a different line of work. There are so many different markets out there moving. There's so many market drivers, and there's so much going on. There's not a boring minute, let alone a boring day. All right, everybody, thanks for joining me. You trade the action well. We'll see you shortly after NFP.